Well, that is the sound that signifies the markets have closed, and it's time to take a look at how the markets have performed this week. And on the show today, I host Linet Muriungi. She's the head of research at Dyer and Blair. Many thanks, Linet, for joining us.
Thanks for having me.
And straight off to the markets, I'm seeing some interesting developments around the indices. Well, this week, the NSE 20 share index is down by 0.23%. What do you make of this?
I think the week-on-week softening of the NSE 20 is primarily attributable to weak performance in the cement sector as well as the utility sector, while the NSE 20 got a bit of an uplift from strong performance that was sustained by the banking space as well as Safaricom. We saw a bit of a downward pull from those two non-financial sectors.
All right.
Yeah.
And still with the indices, I beg your pardon, there's been a review on this with the NSE 20 and the NSE 25. Perhaps just break this down for us. What will change moving forward?
I think the revision was very much welcome because the newly introduced counters will essentially show a better, will give a better reflection of the market in terms of market liquidity.
Valuation?
Yes, valuation and liquidity.
Right.
And I think it's necessary even from a capitalization perspective to make the revision. Yeah.
All right. Let's take a look at the top gainers this week. I'm seeing Kenya Airways is doing pretty well. This week it's up by 23.5%. Stanley Fahari also doing very well, up by 9.25%. Portland Cement, I'm sure we'll be delving deeper into that. But let's talk about Kenya Airways. I'm seeing some positive sentiment around this stock. What could be behind this?
I think investors generally are very confident with the new board and the new management. We saw a contraction in the net loss recorded to about 6.1 billion. At least the debt-to-equity conversion that was effected so that the net asset position moved to a positive, which is also a gain. And I think the recent mention that KQ is looking to expand into European routes through joint ventures is very well. It's very well timed and it is welcomed, especially because of the World Cup that is to be held in Russia, and also just tapping into the European Union open sky policy. I think going forward, that coupled with the fact that they are very keen on growing their premium client base will essentially improve the revenue per kilometer and passenger yield. So that should reflect in the statements going forward.
And of course, for the aviation sector, fuel costs play a big role when it comes to the bottom line. How will the airline perhaps handle this moving forward through either hedging or trying to work out a situation where they're able to contain their costs? Because costs have been a big challenge really for KQ.
True. I think now that is just a factor of, again, ensuring that the revenue per kilometer justifies some of these routes. So we might see a possible shift in strategy, moving away from the, border to border strategy to sort of a cherry picking, and only KQ only going for routes that make financial sense. One, two, hedging will definitely play a very vital role. There is quite a bit of uncertainty with oil prices going forward. Will the U.S. shale oil resume production, especially given the tax cuts in the U.S.? So I think they will have to play it very smart in the oil hedging. Probably consider 6 months rather than the 12 to 18 months that we at times see in the aviation industry.
All right. Yeah. Very good insights there, Linet. Let's talk about Stanley Fahari. I'm seeing the stock is also doing well. They're up 9.25%. Well, compared to last week on Thursday, the share price was at 11 shillings 35. This week, the share price is at 12 shillings and 40 cents. And I spoke to the CEO and was quite bullish, really, that a lot's in the offing for the real estate and property market.
Yes, we're about to see some very interesting developments in Fahari, the Stanley Fahari irate. So they recently released the results. Bottom line was up north of 60%.
Yes, 61 actually.
Yeah, 61%. We saw a revision from, they actually reduced the investment securities. So this possibly hints at a purchase. I understand they're looking to acquire property in Lavington. So I think investors are welcoming this purchase, and they're preempting that earnings should improve going forward. There's also the tax element that is attributable to an irate. And also, given the 0.75 dividend declaration, this essentially gives the irate a dividend yield of about 6.6% relative to market median of about 3.5. So that is a very strong
performance, really.
Yeah.
And would you invest in rates?
Yes, why not?
Have you invested in any?
Not yet, but I would definitely consider this going forward.
All right. And let's talk about the top losers. We're seeing Decons East Africa down 7%. Nairobi Securities Exchange also not doing so well in this week. They're down 5.88%. Mumias Sugar down 5.56%. Sanlam Kenya 5.45% down. And let me just zero in on the sugar sector. Well, we're in the season where the rains have been quite bountiful, and the sugar industry is yet to bounce back fully to where it was, say, 5-7 years ago. What's really happening in the sugar sector?
If we just zero in on Mumia Sugar, there have been quite a number of managerial and governance issues relating to the company. And I think this, coupled with the fact that from a competitive standpoint, the period of harvest, the period between plantation and harvest in the Kenyan space takes about, is it 66% longer than our competition, for example, in Mauritius. So that obviously has a financial implication in our sugar yields.
Sure.
I think, however, there are significant measures that are being made towards sort of giving the sugar industry an overhaul. I understand KESREF, Kenya Sugar Research Foundation is investing quite a bit in ensuring that the sugar that farmers essentially sell to the millers has the right sucrose content, so that it's not just about tonnage, but it's actually about sucrose content. So essentially the yield per cane increases over time. I think that's what we need to sort of focus more on.
All right.
Yeah.
Okay. So in your crystal ball, better days ahead for sugarcane farmers or not?
I think it's contingent on proper management and more a keener focus on the government to look at very select business metrics.
All right.
Yeah.
Many thanks, Lynn. Always a pleasure having you on the program.
Thank you very much.
Well, we want to take a look at this week's Markets 101. This is what we've lined up for you. Well, it's time for my favorite segment, and that is Question on the Street. Let's listen in on what was being asked this week.
My question is, when you fund your money to buy the shares, then you are given back your dividends plus the returns. Do you cease to become the shareholder of that company?
Thank you for your question. It's a good question indeed. So before I address your question, let me just mention what dividends are. So dividends are essentially a realizable return on investment that management decides to sort of reward the shareholder with. So this is essentially paid out from the company's profits for the year or the retained earnings. So by receiving dividends as a shareholder, you still remain a shareholder. You do not cede ownership of the company. That is sort of a tangible, realizable reward for being a shareholder. So you only lose ownership after you sell your shares. Yeah.
All right. I hope your question has been satisfactorily answered. Many thanks, Lane, for your answer on that question. And back to what I asked you, we really need to invest in the rates.
I will. I definitely will. Very interesting things ahead.
All right.
Yeah, I think I'll reallocate some of my shares into real estate-based investments. So,
all right.
yes.
I'm sure you'll tag me along. Well, well, it's time now for a look at historical fact for this week. Well, that's it for today's edition of the Trading Bell. Many thanks for your valued company and for